Hello everyone and welcome to my morning report analysis videos on Friday the 16th of March with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting move on markets. I mean, I say interesting, there's sort of a lot of uncertainty going on as to how the markets actually play this sort of increasing moves, or these ongoing moves by Donald Trump. The sort of suggestion that he's going to be inducing trade tariffs on China, the sort of moves that he's making within his administration to change the key personnel. Again, overnight we had H.R. McMaster that was his head of national security. He's being replaced, so that's another key figure that's sort of changing in his administration to sort of lead the market to think that he's going to be sort of positioning himself as more protectionist and sort of it isn't good for market sentiment generally, but the sort of markets have settled a little bit overnight. What we saw was the dollar, which picked up actually yesterday as we saw treasury yields rallying on the 10-year, sort of finding a bit of support, but 10 years back low, finding a low, but 10 years back lower again today. Now the 2-year, interestingly, sort of breaking out again in front of the Fed meeting on Wednesday next week. And that is driving this yield spread, or the flattening of the yield curve as this yield spread falls away to 10s. So it's sort of, that's generally not really going to be dollar positive, I think, going forward. And what we have got is this I think there's sort of choppy moves in the dollar in recent days. I think ultimately it's going to get sold into, but for now it's sort of it was positive yesterday. The dollar is unwinding that move today. You've got sterling positive, euro positive. Look at the yen outperforming again. Yen is really is moving again to pull dollar yen lower. But is it a safe haven move? I'd question that, because you saw gold yesterday sharply down, $9 down, in fact, even when the yen was strengthening. Now that doesn't tend to happen if it's a safe haven move. So yeah, you do have these equity markets which are sort of rebounding a touch today. Wall Street was a little bit mixed yesterday, up a bit on the Dow, down a bit on the S&P 500. Markets sort of off the highs of the day, certainly, but European markets have reacted positively today. You've got a sort of a raft of second-tier data this morning. We've got the Eurozone final CPI. Now, I say second tier, that's more US sort of focus, but the final CPI, no change expected on the Eurozone CPI. 1.2% for the headline and 1.0% for the core is expected. So that's this morning, but then into the afternoon we've got building permits, we've got housing starts, we've got industrial production, and we've got Michigan sentiment. So building permits expected to dip slightly to 1.32 million. Housing starts again dip slightly to 1.29. You've got industrial production, which fell surprisingly last month by 0.1%, expected to come in at 0.3% positive. That could be a number to watch actually, because we've started to see a little bit of sort of retail, little bit of sort of concern with the US data, maybe rolling over a touch. Capacity utilisation is expected to come higher slightly to 77.7, but it was in the 80s back in a few years ago, so it still is room in that capacity utilisation to improve. And Michigan sentiment again expected to dip slightly to 99.3 this afternoon. So lots going on, but is it going to change the direction of the market? I'm not sure. Now, one of the key factors we had with this increasing expectation of protectionism are these emerging market currencies which are coming under pressure again. Now, I don't often look at EM currencies, but here we've got the dollar Turkish Lira, and we have a breakout on dollar Turkish above 384.80. Now that is a key breakout. That is a multi-month high, and completes a small base pattern. You could argue, sort of measure that sort of 130 pips. So that would be sort of coming up towards 97 area. So that could easily be I say 130 pips. Is that 130 pips? 71.16. Okay, some up from, measure that from the low of 71.16, projected from 384. That gives you around about 397. What is 397? Basically that high of November. So retest of those highs is quite possible, I think, in the coming days. Now, you've got a series of bull candles forming, which is forming an uptrend, and higher lows, higher highs consistently on this chart. We've got momentum indicators strong, RSI pushing into the 70s again, MACD lines gaining traction, and stochastics also strong. I think any intraday correction is a chance to buy it. I mean, we've seen that this morning, the consolidation got bought into and breaking out again. So you've got the market running higher on the hourly chart, using all these rising moving averages. Hourly RSI seems to come back towards sort of 50, sort of 45 to 50 area. MACD lines again still positively configured, stochastics strongly configured. It all suggests sort of buying into weakness on dollar Turkish, and breaking out also above that 389.60 level this morning really does sort of continue the move towards the highs again. So I think that's likely to be seen, especially if this protectionist sort of debate continues. I think the currencies are going to weaken, and dollar Turkish is one that is rising as a result of that, so watch out for that. So I wish you good luck in your trading today, and I will speak to you later.